Welcome to the Life Self-Mastery Podcast, where we bring in entrepreneurs who have created online businesses and improved their lifestyles. Here's your host, Rohit Malhotra.
Pine Labs and Global Logic, and it's also the founder and managing director of Leo Capital India, which invests into early-stage tech-centric startup companies. And they have invested into companies like Beato, Sheroes, Edureka, BulBul TV, among others. Welcome to the show, Rajul.
Thank you, Rohit, for having me. Excited to be here and to do this podcast with you.
Awesome. So Rajul, you've been a part of billion-dollar company like Pine Labs and Global Logic. It's difficult to build a company from scratch and take it to a level, but you've managed to build two really big billion-dollar companies. So what made you start the crazy journey of entrepreneurship?
Yeah, so Rohit, I think I started actually right out of college, so I really don't know any other way. So I started Pine Labs right from my sort of college, from my fourth year when I was doing my engineering. And you know how it is. I think when we look back, these companies look quite big, but one thing leads to another, and you keep chugging along, you keep building them up. I think the reality is that the journey of both of these companies has been sort of long and sort of filled with participation from a lot of people. Like Pine Labs, actually, I practically ran for the first 5 years, and then I was on the board for another 5 years. But there has been like a full team sort of which has worked at it for 20 years. And sort of that's what it has led to where it is today. Similarly, Global Logic, I think I contributed for the first sort of 12, 13 years, but the team has sort of both of these companies have outlasted me and sort of gone on to become even bigger and better over years. So I think it's been more of an organic journey, I would say, with both of these, very sort of fulfilling, but also very organic, bottom up, sort of, just growing year after year, doing the right thing, winning more customers, pivoting business models to make them bigger. So I think that's how the journey has been.
Got it. And did you look at a lot of other business models when you decided on to take on an idea like Pine Labs and Global Logic? What is the thought pattern people should look at when they're looking at solving a problem or taking on a journey which will be anywhere from 5 to 10 years?
Right. So I think in my case, I mean, these were early years as well. Pine Labs was started in 98. Global Logic was started in early 2000s. So I think, at that time, I think the idea of entrepreneurship in India was not as developed as it is today. Right. And again, in sort of my case, it was more organic. Like I saw an opportunity in front of me. I tried to sort of capitalize on it and then kept on building from there. So I think I don't think there was sort of a big, like many entrepreneurs these days, they do like a market structure analysis, where the gaps are, where the opportunities are, what to go after, especially serial entrepreneurs and stuff. But I think in my case, in both of these cases, it was more organic. I think things that came to me, I tried to build on that and then kept building on that. And both of these companies did pivot over a period of time. So it wasn't like the first thing that we started is exactly what the companies do today. I think both companies have pivoted through like 2 or 3 significant iterations to get to where they are. But I think more relevant to today, I do think today is a far more competitive and a far more developed market. So if you are an entrepreneur today, I do think you would sort of have to do a little bit more validation and sort of do a little bit more top-down analysis on what you would want to do and where you want to build a business. So I think today offers you that opportunity versus it was like 20 years back.
Got it. And since you moved out of Global Logic and Pine Labs, you've been you started your investing. So, how did you get into angel investing, and how did it lead to, Leo Capital India?
Sure. So as I exited Pine Labs and Global Logic, I think around 2010, 2011, I sort of had a little bit more liquidity, and I wanted to. An Indian ecosystem, startup ecosystem, had also started looking more and more exciting. Flipkart had happened around 8, 9, and sort of all this internet, the second coming or third coming, whichever way you count it, had started happening. And I think so. I wanted to participate in that ecosystem. You would see a lot of these entrepreneurs, including myself, when we make money, we put back into the entrepreneurial ecosystem because that's what we know. I mean, like, for example, I've never really done well in any other form, like of real estate or public markets or anything like that. So I started investing my own money around, I think this was around 2010, 9, 10. And then over a period of time, I became more and more active. So between 2010 and I would say 16, I made a number of investments, I think 26, 27 investments. And I realized that I enjoyed the process working with these early stage companies, and B, I did well for myself. So I was able to sort of invest in some of the some interesting companies like Misho, Shuttle, Cygnus, 1MG, HealthCart, and I think so. So I learned through that process and decided to go pro in the sense that sort of do it at a slightly larger scale and started Leo Capital in sort of mid 17. And that's what sort of, it was just kind of again, an organic grown up version of angel investing in some way. Yeah.
Correct. And you talked about angel investing, but do you think it takes 7 to 10 years to get an exit, or do you think angel investors can get an exit earlier?
So if I talk from my own experience, I think there are certain companies for sure, like which I angel invested in, which I was able to exit within literally like 2 or 3 years. Like, for example, I made an investment into a company called Quickwell, which was number 2 to Practo in those times. So I made the investment, if I remember, in 13, 14, and then Practo bought us in 15. So that was like a exit within 2 years. Similarly, I think I'd invested in HealthCart, which also spun off 1MG later on, and I was able to sell to like a Series B investor. So again, I got an exit in a couple of years. So I think in few cases, I think the opportunity, especially in a fast-growing company, which is raising more and more investment, there is opportunity for angel investors to exit in shorter periods, like 2 years, 3 years, 4 years. But in others, like for example, Cygnus Healthcare, I invested, it was one of my first investments, and I'm still in like 9 years later, and I'm kind of exiting now actually. So I think in some other cases, it took longer, like 7, 8 years, 9 years, depending on the business. So if it's a more traditional business, like growing sort of at a more moderate pace, it takes longer. But I think if it's like a venture type business, growing fast, then you can exit, in a few years' time as well.
Correct. And about Leo Capital, how big is your ticket size, and how big is the fund?
So Leo Capital One, we've been investing about $1 million on an average. So we've made 14 investments so far. I think 11 have been announced, 3 are still in closing. So I think the minimum sort of we've done is I think 500-600K. The maximum we've done is like more like 2 million. Average has been 1 million. I think so. Yeah, and we've been doing sort of tech investing, consumer, SaaS. We've done travel, logistics. So pretty sector agnostic. But I think mostly sort of tech and sort of large scale plays using tech.
Correct. And what do you look for in an entrepreneur when you invest with them? Are you looking for an Ivy League entrepreneur who's from IIT or IIM, or do you look at what is the market size, or what is the problem they're trying to solve?
Sure. So we generally look, I think, for a combination of, I would say 3 things. One is the market itself. So the question we're asking ourselves is that, do we want to be in this market? Do we want to invest in this market? Do we see an opportunity to create a large company in this market in the next few years? I think team definitely is a big factor for us. I think many entrepreneurs that we have invested in, they are sort of, from top colleges. I think, it's definitely a factor of sort of what your background is, what you've achieved in the past. It's not the only thing, but it's definitely a factor. I think we look for basically history of success, right? In an entrepreneur, whether it's academic success or entrepreneurial success or professional success or passion, so you're looking for sort of some of those things which make them sort of suitable. So the question we're asking ourselves is that, can this team build an awesome business in this space in the next few years, right? We have to sort of comfort ourselves with that. And the third thing we look for is traction. So I think, especially as a fund, we look for sort of things that have happened so far. So usually the companies that come to us have some history. They could be 6 months, 1 year old, 1.5 years old. So they would have something to show. Like if it's an app, then they would have some downloads, traction. If it's an enterprise company, they would have some sort of beta customers or some revenue. So we look at sort of early signs of success using that traction. So and overall, we look at a combination of those three things: market, team, and traction.
Correct, correct. And you recently made investments in BulBul TV and Beato. Sachin has been part of Make My Trip and Truly Madly DP. So what made you invest into BulBul?
Right. So we invested in BulBul in December, January. We were sort of the first investor into them, and
Right.
so I've known Sachin in the ecosystem for the last few years. We've never really worked together, but we have bumped into each other sort of at common events and all that. So we never really knew each other very well. But I've had like great respect for him as somebody who's been out there. He's built multiple businesses, good teams and stuff. So I've always had wanted to work with him. I think he had been working on the concept of BulBul for a few months before he came to us. And when he presented the BulBul concept to us, we absolutely loved it. We felt as we look at sort of the next 200 million, 300 million internet users in India,
Right.
we feel they need sort of more video-based shopping. And we felt that he had really thought through this concept in a fair level of detail, and also assembled a fantastic team, in sort of Atit and Sienna. So he's sort of really created a great team, thought about this concept in detail, and that's why we sort of liked it. We liked the macro, we liked the sort of work that he had done, we loved the team, and that's why we invested.
Correct. And this is for people who are already working in high growth startups, or people who want to get into angel investing. How much of a portfolio do you think should be there in risky investments like angel investing? Because you've been there in the ecosystem, so you understand about what is happening in the market. But what if people would want to invest? How much of the portfolio should be into angel investing, or for the matter, cryptocurrencies?
So look, I think this is very obviously risky side of investing, and most
Right.
people, when they invest in sort of these risky assets, including cryptocurrencies, or I mean, they're very different assets, cryptocurrency and angel investing, but still, I think
Right.
a very high risk bucket. So I it depends on your risk profile, so I can't really put a number to it.
Right.
Should it be like 5% or 10%? I don't know. It depends on your risk profile. Uh,
Right.
I think when I look at sort of high net worth families, let's say, who are doing more formal portfolio allocation, my guess is that only sort of a low single digit percentage goes into early stage investing. Uh,
Right.
so I think that would be my guess. But the other thing I would say is also, if you are doing angel investing, then don't do just one company. I think what I've seen is that many sort of people, sometimes people fall in love with one company and they put
Right.
money into that, and that doesn't work out, and they sort of lose that. I think it's important to make a portfolio. So let's say if you want to invest 50 lakh, let's say, then I would say that you're better off doing 5 into 10 versus doing,
Right.
let's say, 15 to 1. Just because it's also a learning process. In the process of doing 10 investments, you'll meet 50 companies, 100 companies. It'll take you a year or two to make these investments. So there will be some sort of diversification time wise, there'll be diversification portfolio wise, and usually, like if you make 10, then you are more likely to find at least one or two, which will sort of return your portfolio.
Right.
So I think, so I would say just do, like, I would say 10 should be the least count, sort of
Okay.
if doing angel investing versus doing just one or two.
Got it. And Sachal, I wanted to understand, how did you approach LPs for investing into your VC fund? There's been a high growth of VC funds which have come into picture in India. How difficult was it to raise your own fund, and getting LPs on board?
It was a new thing for me since I never sort of raised a fund. So I think I didn't have a good sense of who these LPs are and sort of how to approach them and all that. So like anything
Right.
new that you do for the first time, it was definitely like challenging right in the beginning. But I think as I got deeper into it, I was able to understand sort of, and like anything else is, LPs are very well connected to each other as well. So you network
Correct.
way, you get one and then they refer you others, and that's how you grow. So I think it's definitely challenging. I wouldn't say that it was sort of a slam dunk that sort of I pitched and we were very easily able to raise money. It took time. It took sort of a lot of effort. It took a lot of coverage to meet different kind of people, sort of wealthy individuals, high net worth families, funds of funds, more sort of institutional funds and all that. So I think it took a while, but it was also a good learning exercise for us. I think it's there is a difference between angel and fund, and I think LPs are the difference. So I think just helping to understand how their worldview is, what they are thinking of markets, how they're thinking of India versus other markets. All that was useful to us also in our thinking and in terms of sort of where to put our money.
Correct. And are you industry agnostic, or do you avoid certain industries, for investing into, when you're looking to invest into an entrepreneur?
Right. So we generally, I mean, like I said, more tech centric. So within tech, I think if we see a large venture type play, we are industry agnostic. Generally, things that we have not done are, and which are happening in India, are things like consumer brands.
Okay.
So if you look at sort of, let's say, like consumer brands and juices, fashion, bags, you look at any area, there's a lot of consumer brands getting funded these days, electronics. And I think that's one area that we have not done so far because I think it's just, we're more sort of tech centric, like I said. But otherwise, within tech, sort of, we are pretty industry agnostic.
Okay. And do you think the multiples are lesser for consumer brands? Is why, or maybe there's less moat for investing into consumer brands, or do you think you're just focusing on software companies which can really multiply?
I think the risk reward is definitely different for consumer brands. I think they may be lower risk but lower reward. So I think when you're constructing a portfolio, you have to be, just kind of cognizant of that, of sort of where you're playing, how you're playing. So we have a certain kind of portfolio where we have taken certain risks and we are expecting sort of commensurate rewards. So I think the consumer brand risk reward didn't really fit into our portfolio. And I think that's really the reason.
Okay. Interestingly, we've had a couple of IPOs in US, especially Uber, Pinterest, and maybe we'll have WeWork. But in India, even though we have a huge consumer base, we've had Flipkart, which got a really a big exit last year. Do you think India is open for IPOs in future, or is it going to be more of an M&A sort of a market?
Yeah, so I think that is a real problem. I think Indian public markets tend to be more conservative. They tend to value more profitability versus growth, historically. So it's hard for many of these tech companies which are in growth stage to deliver that kind of history of profitability that Indian markets traditionally value. So it's hard for them to go public in India. And going public outside obviously has its own challenges. So I think public markets, I mean, when we are investing, it'll be like very few, if any. If I think of our current portfolio, maybe one company may have a chance of going public in India.
Right.
I think most of the others are going to have more strategic kind of exits. Either some other company buys them, or we sell our stake to a future investor.
Right.
So I think vast majority of sort of exits, I think, are going to be in that bucket of strategic exits or exits to other financial investors versus IPOs, in my view. Which is also the case even if you look at, let's say, US, more developed
Right.
markets, even though we have a lot more IPOs there. But still, if you
Right.
look at it as a percentage, I'm sure like a vast majority, maybe as much as 80, 90% of exits happen in a strategic fashion versus IPOs.
Right. And speaking about Uber and WeWork, I want to talk about SoftBank. Do you think there will be a trend of having such mega funds like SoftBank, and what can a portfolio company do, if they're competing with a SoftBank portfolio company, because the kind of funds and the kind of people they have. Do you think what would be the strategy of a portfolio company is going to go against somebody like SoftBank?
Right. Look, I think SoftBank definitely kind of upped the game, changed the game as they sort of started investing at a very different sort of level, especially in a country like India. I mean, we had never really seen that kind of money before sort of SoftBank came in. I mean, sort of writing a couple of $100 million checks or even $1 billion checks. I think it is definitely challenging. Let's say if you are in a competitive situation with a company which is funded by SoftBank, because I mean they have, let's say, a lot more money, and it's hard to compete with that. But I think like companies find their way, they find their niches, they find their ways to survive. They become more competitive, and there is money outside of SoftBank too. I think these days we see a lot of these hedge funds directly investing into Indian companies. Like we see even like institutions like Canadian Pension Board cutting large checks into Indian companies. So I think it's not that capital is not available outside of SoftBank. So I think there is obviously capital available, and companies are tapping into that capital to compete with SoftBank funded companies. In all markets. Like if you look at sort of any market, right? You look at sort of US or China or India. There are obviously competitors, and they are being able to raise capital elsewhere to compete. So I think it does get harder, I'm sure, but I think there is capital available, and companies have to be more innovative when they find their way.
Correct. And do you have any advice for budding venture capitalists on on what should they look at when they're trying to build their career in venture capital?
Yeah, so I think, look, it's like anything else. I think investment, in my view, tends to be a very specialized thing. I always almost equate it to medicine. So I think, let's say, think of like a very specialized surgeon or sort of, eye specialist or sort of whatever, gastro, right? And they know their field very well. So I think investing is also like that, I feel. So whether you're a public market investor or early stage investor or growth stage private equity investor or some other form investor, crypto investor, I think each of these are very specialized areas on their own. And I think you need sort of experience and sort of some, I would say, war wounds, to show for as you get it good. There's no sort of short-term success in these things. It's just like we go to experienced doctors, right? Somebody who's been out there for 15, 20 years and has seen a lot of patients and knows what to look at. I think investment is like that as well. So for budding sort of VCs or investors, you have to sort of get onto it and find a way to build up a track record and history of 10, 15, 20, 30, 40 investments. I think and I think that's the best way to sort of learn, right? And I think obviously it's expensive if you lose a lot of money. But I think that's really the only way to learn, of sort of what to look for, what you like, what works, what doesn't work. So I think that's really the way to do it, in my view.
Got it. And I quickly want to do the top three. What is your favorite business book?
Business book. I always liked Jim Collins, sort of the two books that he wrote, which was Built to Last and Good to Great. These were about sort of everlasting companies. They're more from early 2000s. So I love those two books. And I think I continue to sort of abide by them in many ways.
Got it. And if you could go back in time when you started investing, what is the one thing you would have focused on, or anything you would have done differently?
So when I started investing, it was early, and I was also just finding my way. So I think knowing what I know now, I think I value now markets more and more. What I've learned, and I think all investors will tell you that I think picking out the right market at the right timing becomes the number one determinator more than anything else of investment success. I think so. I think I've become more and more conscious of that now, and I think some of the early mistakes I would have avoided if I knew a little bit more of that when I was early investing. But that's just part of the learning curve. That's it.
Got it. And your any favorite online tools, example, Gmail, Slack, Zoom?
I mean, I think India runs on WhatsApp, right?
Right.
So you can't be too much away from WhatsApp if you're working in India. But yeah, I'm fully on the Google stack, sort of Gmail, calendar, everything, the whole hog. So I think that's kind of between Gmail stack and WhatsApp is, I would say, 80% of my usage.
Got it. I got another one for you. Do you have any favorite VC whom you follow or admire?
All the sort of, I think VCs, larger VCs in India, who've been out there, Sequoia, Ceph, Lightspeed, all these funds, I would say, Axel, I think because we're in the profession, we have to follow them. And I admire all of them. I think they're all sort of taking interesting bets and sort of building interesting companies. They're all sort of good, seasoned professionals, so really something to learn for us from all of them.
Got it. And what is the best way people can reach out to you, and how can an entrepreneur, pitch to Leo Capital?
So I think the best way we like is that if you just go through our website, which is www.leo.capital, then you will just see a simple website sort of with our portfolio and some of the things that we believe in. There is an email there called pitch@leo.capital. If you email it to us, how that helps us is that also goes into our CRM, so we're able to track it a little bit. If you just follow the process there. Otherwise, you can also directly reach out to me. It's Rajul@leo.capital. But I think it does go into our CRM. So our preferred way is that if you just mail it to our sort of email, which is pitch@leo.capital.
Got it. Right. Rajul, thank you so much for coming on to the show. I know you're not here in India. You took out your valuable time to come and speak to me. Thank you very much, and I'm sure listeners would have learned a lot from our discussion.
Rohit, thank you for having me. I enjoyed the discussion, and I hope it was of value to you and some of your listeners.
Sure. Thank you.
Thanks for listening to the Life Self-Mastery podcast, where we teach you how to start and grow your online business. For more information, visit Rohit's blog at www.lifeselfmastery.com.